Thank you for joining me. I'm Alex, and I want to talk about Carvana. So, what they do is they sell cars on the internet, which is such a novel concept that before Tesla, everyone thought it would never work. But so far, they've kind of pulled it off. So, current price is $258.88, which gives them a market cap of $44 billion. The dividend is zero. I don't expect that to change anytime soon. Definitely wouldn't count on it. Revenue $3.9 billion, which is up over 100%. Earnings negative $115 million, which is also up over 100%. And currently they have a PE of negative 100. Now in the negatives, higher PE is kind of better because that means they're losing less money. Forward PE is also not listed, which means that no one expects them to make a profit in the current year, and I definitely don't think that they're going to make a profit. Total assets $2.1 billion, total liabilities $1.9 billion, which gives them a total stockholders' equity of $98 million, and assets and liabilities both over double what they were last year. Not necessarily a bad thing, but they're the tiny gap that is stockholders' equity, which, by the way, going up, always a good thing. With earnings of negative 115 million, still pulling off a gain in stockholders' equity is definitely not bad. So risk factors, I would rank something like a global pandemic number one here, because people don't really need cars right now, and that kind of played a big part in why the insane growth of over 100% is going to come to a stop. And the amazing thing is that for 3 years running, they had a growth of over 100%. So they went from 360 mil revenue to over 800 million to 1.9 billion to 3.9 billion. So definitely going pretty well there. In the current year, obviously not a huge growth, but they still look like they're going to be growing their revenue. So things are going well, and this is one of the stocks where if you were looking for a growth investment, this would definitely be it. So the problems obviously come from balance sheet being reasonable crap. The earnings being negative is a big problem, but not out of the ordinary for a company that's growing this fast. The problem is their market cap is over 10 times their revenue. So even if they had earnings of 50%, they would have to grow revenues they would have to double their revenues, 8, 16, 32, 64, 128, so 5-ish times, before they would be at a reasonable PE. And a growth of 100% is not necessarily likely, although it's possible, and they have pulled it off for 3 years in a row. So it could happen. I don't really expect that to happen, and it's kind of hard to predict when the recovery will begin from the pandemic either way. So I would expect that to last for a couple years, and then if they can go back to a reasonable growth, it would take another 5 years. So in 7 years-ish, they might have a decent PE, so for the current price. So if you want to buy them and hold them for 7 years, I think that it would possibly be a reasonable investment for a growth investor. Other risk factors include that 7 years is a long time, and there might be other people getting into the business that could take their market share. I think that Walmart partnered with someone recently doing reasonably similar things. Also, a lot of car dealerships are selling cars on the internet now, so their competitive advantage is slowly going away. I don't think that I would be investing in a company like this on the off chance that they'll still be in the same position in 7 years when things will be reasonable. So I'm definitely going to pass on this, but for a growth investor, I think it would warrant a deeper look into their 10K and 10Qs and maybe what they think their risk factors are. So obviously for a growth investor, definitely look into this, and I'm not sure if you should be investing in it, but with the current, if you take the trailing 12 months out, with the current growth up to the last fiscal year, things are looking reasonably well. So kind of start your analysis there. For a dividend investor, there's obviously nothing here. For a value investor, there's even less here, honestly. So that's it, I guess. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.